Your Social Security taxes are going up, my friends, and I can prove it right here, directly from the horse's mouth, the Social Security Administration itself. This is from the Office of Retirement and Disability Policy, Income Taxes on Social Security Benefits, written by Patrick Purcell. Dateline was December 2015, but nothing has changed. Nothing has changed, and as such, we know you're going to pay higher Social Security taxes. That's what this paper says. Since 1984, Social Security beneficiaries with total income exceeding certain thresholds have been required to pay federal income tax on some of their benefits. Because those income thresholds have remained unchanged while wages have increased, the proportion of beneficiaries who must pay income tax on their benefits has risen over time. A Social Security simulation model projects that an average annual of about 56% of beneficiaries' families will owe federal income tax on part of their benefit from now through 2050. So more than half. If Congress does not adjust income tax brackets upward to approximate the historical ratio of taxes to national income, the proportion of benefit will be even higher than these projections. So what's happening here is wages go up higher than prices on an annual basis. And as such, right now our prices are where we're indexing our CPI. All right, tax brackets are based not on wages but on CPI, and as such, they increase at a slower basis, which means that as your wages go up, you're going to make more and more money, and you're going to be in a higher and higher tax bracket because they don't get your wages grow at 1% more per year than does the prices. That's not good. That just shows you you're paying more and more taxes, essentially on less and less income. I mean, if you factor in inflation. It's not good. Since 1984, Social Security beneficiaries with total income exceeding certain thresholds have been required to pay some taxes. In 1984, less than 10% of beneficiaries actually paid taxes on their benefits. However, we project, the Social Security Administration, that 52% of families receiving benefits will pay income tax on their benefits in 2015. Most of these families will be in the upper half of the total income distribution. All right, so that's not good, man. All right, so we want to keep going down here. Projecting taxation over a period of decades requires certain assumptions. For example, under current law, income tax brackets are indexed to the rate of growth of consumer prices. In the long run, incomes tend to rise faster than prices as labor productivity increases. If tax brackets continue to be indexed to prices as opposed to wages, the share of benefit income tax paid will eventually rise above the historical averages. Long-term tax estimates must assume either that income tax brackets will continue to be price indexed or that Congress will act to adjust the tax brackets upward. They're not going to do that because they like the idea. We get to have more money to us, even though it's fake, man. You have two ways to look at this. Your income is rising at 1% a year more than the prices, compounded. Now, your income tax brackets are going with this right here. They're still lower than what they would be if they were indexed to wages. So you pay more taxes. All right, so let's go down here. I want to show you something. We talked about the background of Social Security in 1983. That's when they first passed the law. 50% of your benefits were subject to taxes if you met a certain threshold, which is still the same as it was in 1983. 10 years later, the Omnibus Budget Reconciliation Act established an additional higher threshold. 85% of your benefits could be subject to taxation. All right, let's see. The 1983, we were talking about the 85%. Okay, so let's keep going because this is a lot of good stuff in here. Hold on a sec. Here we see percentage of Social Security beneficiaries filing income tax returns. All right, 72%, 67.5% from 2020 to 2050. Percentage of income beneficiaries, Social Security beneficiaries actually owing income tax. You can see it goes from 47.1 to 56.2. All right, let's keep going. The average percentage of Social Security benefit income owed as income tax. Families with taxable benefit income, the average will be 14.7%, whereas in 2010 it was 11.7. That's a 30% increase in your taxes. The average percentage of Social Security benefit owed as income tax. These are all people who file tax. These are families filing a tax return, and these are families with taxable benefit income. If you have taxable benefit income, they're projecting that you will get a 30% increase in your Social Security taxes between now and 2050. You have done nothing else, but the wages, because they have an index, the Social Security tax brackets, and the consumer price index is going up slower than the wages. Your tax brackets themselves are putting you in a higher and higher bracket relative to the wages. It's freaking nuts. And never on top of that, the Social Security tax brackets are still indexed in 1983. It's nuts. Look at that, 14.7. That means if you made $50,000 in Social Security taxes, almost $8,000 of that is subject to taxation. It's nuts. Median percentage. Now this is 50% of, 50% above, and 50% below. Families with taxable benefit income, the median percentage is going to be 20% higher. Right now, it's 10.4% of your benefits are taxed. No, not taxed. Your 10.4% of your Social Security benefit is owed as income tax, and they're saying it'll be 12.2 in the future. Crazy. It gets worse too, man. Here, the marginal tax rate is 10.15. Now, this is written before the Trump tax bill. Well, it reverts back because of the sunset law in 2026 anyways. 10, 15, 25, 28, 33. So here's married filing jointly. You can see less people are in the 10% married filing jointly. More people are in, well, I guess relative to single. Never mind. That's not what I was looking for. But let's keep going. Percentage of Social Security benefit that is owed as income tax among beneficiary families. Selected percentiles and projected quintillion, whatever that is. So if you're in the 75th percent, all right, the top 25% of Social Security income beneficiaries' income. So you're in the top 25% of income for people who are on Social Security. 13% of your benefit will be owed as taxes. If in the top 10%, 17%. It's crazy. And they talk about the actual, here's the average wage index, and you can see the taxes that you're going to end up paying. Let's go. Mean percentage, mean is average again. Social Security benefit income as owed as income tax among beneficiaries by family. So we got here the fourth quartile. So again, the top 25%, 16.1% of your benefit is not taxed. You'll lose to taxes. You make $100,000, you're paying $16,000 in Social Security, whereas right now it's only $14,000. All right, let's go. Median percentage Social Security benefit income owed as income tax among beneficiary families by the projected 2010 in quinquennial. I can't pronounce that word, so we're going to keep going. Conclusion. Social Security benefits were first subject to income tax in 1984, and since then, the proportion of beneficiary families whose benefits are taxed has increased from 1 in 10 to what they're modeling at 52% in benefits in 2015. The median tax benefits among all beneficiary families will equal less than 1% in 2015, but only among those who have taxable benefits, the median income tax payment will equal 11.1% of Social Security benefits. By 2030, Mint projects that 58% of beneficiaries will owe income tax on their benefits, and that the median income will equal 5%, where right now it's just 1%. That's a quintupling of how much you got. That's just a median. Among families that owe income tax on their benefits, the model projects a median payment equal to 12% of their Social Security income. Crazy. These base estimates are based on the assumption that Congress will amend the provisions that currently require tax brackets based on price indexing to wage indexing. The percentage of Social Security benefits that would be owed as income tax will exceed the level that we project if they do not do that. Yeah. Because the progressivity of the federal income tax assures that higher income beneficiary pays the most taxes, the taxation of benefits reduces the net Social Security income received by the higher income beneficiaries. So you're going to pay, I'm telling you, man, you're going to pay more taxes to Social Security, so you better start planning accordingly. I'd love your thoughts. Thanks now.